Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 27, 2015. Daily chart of the SPY. What a day. Unbelievable. Market just took off to the upside and grinded higher all day. Let's take a look at the 10-minute chart and just get a snapshot of what went on today. Basically, we just took off and we grinded higher all day. We made that low yesterday, and I thought what was interesting was, if you remember in last night's video, and go back and check it, it's fascinating to me, I mentioned there was a fake print, and the fake print would be when the actual, on the chart, specifically on a 10-minute chart, I saw a long tail like this, but real long, from down here, when we were down here yesterday, was all the way up. And where did the fake print go to? Get this. Now remember from last night, I said it last night, 212.92. It was 212.92, and then I told you that sometimes it's kind of like a signal, and it's an order that was once in the system, and it was pulled out of the system. It's a fake print. It's a fake order. And what it does is it tips those that are looking for it, I guess, off to what at some point that the market is going to be at that level that the fake print indicated. Now, that just smells all kinds of scam. I get it. But it is what it is. And if you'll notice, the high today was 212.98. It's just amazing. I mean, we went up almost $2. Or we did. We went up over $2 from low to high today to get to the fake print number at 212.92. That's just fascinating to me. That's the invisible hand at work. That's the put underneath the market at work. That's the President's Working Group, also known as the Plunge Protection Team, and that is something real, folks. There is something, and go look it up on Wikipedia or just type it in Google and you'll see. It's called the President's Working Group, and it was instituted, I believe, under Ronald Reagan. And it is a real organization. It's probably 2 guys, 5 guys, whatever it is. And they monitor the markets, and they actually, I don't want to say they manipulate the markets, but they're ready to step in if the markets are fractured, that the administration, for example, thinks that it's needed that they participate in the markets. And that's basically what the Fed's been doing for 5 years. So either way, and that's what the Bank of Japan is doing, and that's what the ECB is doing in Europe, and so basically everybody's doing it. But I just think it's fascinating that a fake print goes up to 212.92 yesterday. I saw it with my own 2 eyes, and then today we went up to 212.98. Unbelievable. So does that mean there's no more downside? So let's go back to the daily chart and kind of see where we are. You know what? It doesn't, I don't know. It's going to be interesting. I mean, I don't have anything telling us one thing or the other. The only thing I can do is go with what the market is telling us. So let's just try and decipher what the market is telling us now and use our best efforts to say, well, if this happens, then there could be downside. If this happens, then there could be upside. So let's just go through some of that stuff. So here we have a high. Okay, the high from yesterday was 212.50. All right, and you closed above it today. So right now, your line in the sand, as long as the market on a daily closing basis stays above 212.50, right here, 212.50, then it's in a bullish position. Pretty simple stuff. Any close below 212.50 on a daily basis, and you can even say on an hourly basis, if we begin to close hourly below 212.50, then something else on the downside is developing. Another thing I thought was interesting is this last candle of the day. So you went up and you tagged 212.98 on the high, right? And then immediately, the last candle of the day, the market sold off from 212.98 to 212.66. That's a pretty good sell-off at the end of the day in the last couple of minutes with nothing going on. So that tells you that they were taking the market up to 212.92 or higher regardless, and that was it. That was all they were going to do, and then they were going to let it go and let the sellers come in and drop the market a little bit. Interesting. So as long as you know this stuff goes on, it doesn't matter. It's the folks that don't know what's going on that end up getting screwed, because I know, see, what happens is there was a lot of folks that got short yesterday, right? And they're getting short because they think this is it. We're going to have a 5-7% sell-off, whatever the case is, and I'm going to catch most of it. And they get short yesterday, and then when do they cover? Today. What sends the market up? Short covering. I mean, that's part of it anyway. It's just that happens over and over and over again. And I've told you, folks, on a number of occasions, dozens of times, this is not a market to be short. You can buy pullbacks, but there's higher prices coming. And we keep seeing it. Every time there's a dip, it's met with buyers. Dip, buyers. Dip, 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 buyers. There's just buyers everywhere. And this is basically a choppy market, but I'm telling you, for the next several weeks, we'll just say it could be a couple of months, there's upside coming in this market. There's higher prices. There's going to be new highs. Do you think yesterday, based on what you were hearing in the news, reading on the blogs, wherever you were getting your information from, did it seem like all was going to be well today? Did it seem like the market was just going to negate the entire move from yesterday, snap back, and go back up to 213? I mean, it didn't seem like that yesterday, but each and every time we have a sell-off, the same routine happens. We sell off a big down day and then a reversal. Big down day, reversal. Down day, reversal. Here's another one. Big down day, reversal. So we're just going to have to take it one day at a time. And as long as we stay above 212.50, that's bullish. Below 212.50 is bearish. On the S&P E-mini, let me give you my numbers there. It's really 21.15. 21.15 is going to be your pivot. That's your line in the sand. Let's see intraday how it treated that. I really didn't pay attention today to the 21.15 area. Yeah, I mean, not really. We hit it. We backed off. We hit it again. Stalled. Hit it. And then we busted through it. Came back to test the 215 and then rocketed off to the upside. So when you see that, you know the 21.15 is very important. You hit it 1, 2, 3, 4, 5, 6, 7, 8 times before the market took off to the upside. And you can see, as soon as we got above it, even though we retested it, as long as we kept closing above it, that was going to be bullish for the market. Okay? So that's just a little bit of a tidbit there for you. So that's your number. 21.15 is your pivot. And we're going to leave it at that for tonight. IWM was strong today, up 1.23%, $1.52. Strong market, filled the gap, made good closing, I wouldn't say highs, but we made good closing numbers. Let's take a look at the daily chart of the IWM. That's the 60-minute chart, daily chart. Quite didn't take out these highs yet, but if you do, then you're going to go to these highs here at 127. So you really have to bust through 125.5. So you got another 75 cents on the upside in order to, and you have to close above there in order to get to 127. And if the market's bullish and the S&P's going up and the IWM's going up, then you can look for higher prices above 127 in the IWM. Real quick, let's run through a couple things. You know what? Before we do, I want to make mention of IYT, the transportation average. In this morning, I put out a trade alert for the IYT, which is the transportation average ETF, tracks the transports. And I got like probably a dozen emails about, why are you buying this? You're catching a falling knife. CNBC said there was a death cross yesterday. And that's funny. I talked about that in last night's video, how CNBC said there was a death cross in the IYT. But let's take a look at why I bought it. So here's a 618 retrace. We didn't quite get there, but we got close. Okay, this is 618 retrace from this low to this high. Let's zoom out a little bit, and we'll see where that is. I'm gonna zoom out this way. Okay, so you can see how you can really see that. You know what? Let's go over to the weekly, and you can see from this pivot low. And the reason I took it from there, I could have taken it from here. People, when you do Fibonacci retracements, it's always a mystery. Well, where do you take the pivot low from? Or where do you take the pivot high from? Normally, I do it a number of ways. I take the pivot low from here. I take it from here, and I took it from here. This one made the most sense because this was on volume. It was on about double the average volume at the time. It was about 16 million shares. No, weekly volume. It was 5 million shares, and the average volume for the week is down at like 1 million, 1.5 million. So it was huge volume, and we took off to the upside. And then what I'm saying is we're retracing, and we kind of stalled. Let's go back where you can see the numbers. This is important because it's kind of neat. Let's just do the daily. So you see the 618, okay, and we hovered on the 50, hit it, reflected the 50, came down, hovered over it, and that's probably the reason we didn't bounce off of it again, because you hovered over it all this time. And then we broke through it, and we came down close to the 618, but no cigar. But here's something else. So let me go back to the weekly, and this is something that nobody, I'm going to take away these fib lines, nobody talks about this kind of stuff. I believe that there's a lot of symmetry in the market. I show it to you from time to time. Now, take a look at this. From high to low, all right, in this candle, this is a weekly chart, from high to low, 163.76 to 154.35. It's about $9.50, right? Okay, so if we had $9.50 down, and then we went sideways for 1, 2, 3, 4, 5, 6, 7, 8 weeks, okay? Well, if we're going to make a new low or another low, okay, it makes sense to me, because I see it all the time, that we're going to have an equidistant number from high to low and then from high to low. But from what high? Is it from the start of this candle all the way down here? Or is it from the high of where we were consolidating? Well, that's what I prefer to use. So where's this high here? 160.29, $9.50 brings you down to 150.5, right? Roughly. So now that's not the fib retrace, but to me, I thought that would be good enough. Where was the low yesterday? 149.69. So you see we're within on a big index like this. It's a $150 stock or an ETF. You know, you got to give it some 50, 75 cents, even $1 leeway sometimes. And that's what I'm doing. And then I had, the fact that we're still in the bullish part of the year. I'm looking for higher prices for the next couple of months, and there's no way that the stock market as a whole is gonna have a meaningful move to the upside without the transports, without energy, without the financials. Everything's got to participate, folks. So the transports have to participate. So that was another, factor for me. It's not a factor saying it was a low. It's a factor saying, you're going to have to see a rally with the stock market rally, and I think another rally is coming. Not tomorrow, but, well, you saw it today. So there is bullish tone underneath the market. So then you had the CNBC death cross discussion yesterday. They were talking about a death cross in the transportation average, and they were talking about, I guess, the 50-day moves across the 20-day, and that's a death cross. But what they didn't tell you, and what nobody told you, is that they've talked about death crosses for 5 or 6 years since we made a low in 2009, okay? And none of them came true. Okay, I personally have heard them talk about it half a dozen times, and I hardly watch it at all. So that means they've talked about it probably at least a dozen times, 2 dozen, who knows? Okay, whether it's a stock market, whether it's the S&P, whether it's the IYT, who knows what they're talking about? But there's nobody is getting bearish down here. This is not the time to get bearish. This is where you get bullish when you had a 618 retrace from the low to high. That's when you get bullish, right? You don't get bearish here. So CNBC, in classic fashion again, they're talking about something after the fact. They're late to the party. They're telling you after the move has happened what's happening. Okay, so that's why you can't pay attention to anybody on there. It's really, they're doing everybody a disservice. Okay, so they talk about a death cross yesterday, and today we have a nice solid rally in the IYT. And I bought it today because I saw the morning action. I saw bullish behavior. I had all those other factors, the 618 retrace, the death cross from CNBC wasn't really a factor. I just think it's funny and all that stuff. So that's why I took the trade. So I'm not catching a falling knife. You're supposed to buy stuff on sale. You're not supposed to buy at highs. Buying high and selling higher works when it works, but it doesn't normally work. Okay? You're supposed to buy stuff on sale. You're supposed to buy into good price levels, and that's what we do here, and we're going to keep doing it. So I just wanted to show you that trade. I thought it was interesting. I know this is getting long in the tooth, so let's run through some of the other markets real quick. Gold. Got a bunch of lines in there. Let's clear up this chart. Let's go to the daily chart. Gold is hanging out at these lows here, and I know this is going to sound crazy, but I still have bullish indications for gold into next week. So that means that at any point from now into next week, we should see an up move in gold. And where would that up move take us? Well, I think it would take us back to this all-important thick purple trend line, or lavender or fuchsia, whatever color that is. It's really, I'm going to call it 1206, excuse me, 1206. It's 1205.82, 1206. So if I'm right, if the analysis is right, I believe we're going to have a rally between now and sometime early next week back up to 1206 in the gold market. How it handles this line, how it handles this price level. Can we spike over it and close over it hourly and then daily, or are we going to get deflected at the line? And we'll have to see what happens when we get there. But I have a move going up to 1206 sometime between now and early next week. So there's your gold story. Oil. That's not oil. So oil, this is the July contract. Similar scenario in oil. We're at 57.64, and believe it or not, I wouldn't be surprised to see the oil market push towards $60 by sometime next week. Now, if I have an indication in gold and I have an indication in oil for higher prices, does that mean I have an indication for the dollar, in the dollar for lower prices? Maybe. We'll get there when we get there. But I have an indication for higher prices in oil, and really 60 is the number. I don't know if we'll get to 60, but call it 59.5 to 60. So what that tells you is this high here is 60 and a quarter. It tells you that oil is probably going to challenge the high of this big down day here, which coincides with the 20-period moving average. So that's what I see happening in crude oil. We'll review it. We'll take it one day at a time, and we'll see what happens over the next 3 or 4 trading days. Because if it's going to happen, it's going to happen within the next 3 or 4 trading days. Okay? What didn't I talk about? I talked about the stock market. I talked about the IYT, which I wanted to talk about. I talked about gold, talked about oil, bonds, TLT. Bonds have been strong, and, there was a little bit of follow through today. So, I wouldn't step in front of the bond market here. How much more upside is there in the bond market? I think the upside right now would be limited to the 200-period moving average, which would put the bond market, or TLT, at 123.94, or 124 round number. That's what we'll call it, 124. So that's as much upside as I see right now in the bond market. Let's just go to the hourly and see if we see anything else developing. That's the 30-minute. If we want to take a fib retracement and see what that coincides with, we can do it on the hourly chart, do it from this pivot high here. Let's just see what happens. This is probably a 25% retrace or something like that. Yeah, 25. And then, there you go. 123.55 is the 382 retrace. So pierce through it, 124. So between 123.55 and 124 is your target on the upside for the short term in TLT. I don't think it rockets through there. I think it hits there, and then it's going to have to pull back a little bit. So you see how we look at the markets in a lot of different ways. I look at them on a lot of different time frames, and when I begin to see the same thing, the same result, or the same conclusion by looking at different things on different time frames, I begin to develop a potential trade. You see how I'm doing that? I look at the weekly, the daily, the monthly, the hourly. I look at Fibonacci retracements. I look at other trend lines. I look at other calculations that I do. They're secret calculations. And then I look at other corresponding markets, and between other corresponding markets and all those other things I do, we come out with the secret sauce, and that's how all of these forecasts are made. I don't tell you all the calculations, but I give you probably 80% of what I do on a daily basis to come to the conclusions that I come to, and you'll know that it's pretty good. Okay, I'm right a lot of the time. So, there it is. So the dollar. Let's finish up with the dollar. Where are we with the dollar? Well, guess what? Last night we talked about the dollar was going to go to the magnet area of, let me see. No, I thought I had my fib lines drawn in there from last night. And I guess I took them out. I don't know what happened to them, but let's do it again, okay? We had a high to low, okay? And then you're going to have to bear with me a second because I want to get it on the number because it's important, okay? The high was 100.785, right? 100.785, okay? It's on the number, okay? And the low was 93.15 or 93.17, 93.15, okay? Now watch this. We did this last night, but it's worth doing it again, okay? Oh, it was on the continuous contract. I'm sorry, folks. I brought up the wrong contract. I brought up the June contract. I actually did the number in the continuous contract. My apologies. Okay, so here is your 618 retracement at 97.68, and today, what was our high? Okay, there's a little doji candle here. You can't see it. Today, our high was 97.88. Well, that's pretty interesting. So yesterday, I told you that the 618 would act as a magnet and draw price right into it, and then we backed off. Okay, now you had from the low 1, 2, 3, 4, 5, 6, 7, 8 days up. Okay, 8 days up with a doji into a 618 retracement. What do you think happens next? I mean, you don't have to be a rocket scientist to see what happens next. Okay, under normal conditions, right? Under normal circumstances, you would have at least a 3-day pullback. Okay, if you're going to see higher prices, you can do a 3-day pullback and then higher prices, or you can just go down. And remember, last night I told you that if this is a wave 5, we can go all the way down to $90. But we don't know that yet. We don't know what's developing yet. I don't care what's developing yet. I'll figure it out as I go along. First order of business is to close below this candle here, which is 96.53. So until we do that, I'm not concerned with how low we can go or what's happening 3 weeks from now. It doesn't matter. Okay, right now, I'm just determining that if this worked out the way it did, the 618, okay, and we repelled it within, 2 ticks, right? And then that's telling me that these Fibonacci lines are important. It's telling me this low was important, this high was important, and these numbers are working out. Okay, you could see how we stalled at the 382. We blew through the 50, which was interesting, but we came right into the 618. Now, I think we continue to stall out and we have a pullback for a while. We'll see what happens. And if we have a pullback for a while, circle back to gold, circle back to oil. Great excuse. If the dollar's coming down, great excuse for those two commodities to move higher. Okay? And that's pretty much the whole story tonight. I think that's it. So I'll leave it there. Hopefully this is helpful and you're getting something out of it. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.